we are. Yeah. Good afternoon, everyone, and a warm welcome to today's live webinar on KSA Transfer Pricing and Overview and Framework, hosted by Hundt Partners, a legal and business advisory firm based out of Saudi Arabia. Today, we will be discussing on the KSA Transfer Pricing Overview and Framework. Thank you all for joining us. We have participants dialing in from across the Middle East and Europe, reflecting the growing importance of Saudi Arabia as a both regional and headquarters location and a critical jurisdiction in global operating models. My name is Anand Vemuganti. I'm the Business Advisory and Tax Technology Lead at GTPN. I'll be moderating the session today. GTPN closely works with the multinational groups and CFOs and tax leaders on transfer pricing, cross-border structuring, and operating model alignment, particularly across the GCC and emerging markets, with a network of firms across the globe in Europe, Africa, and Asia Pacific. On today's discussion, we'll be moderating in terms of the agenda reflected on the slide, legal and regulatory updates, and Vision 2020, a keynote speech by Mr. Johan Hundt, and then followed by framework in terms of Saudi Arabia transfer pricing journey, the framework, the methods and comparability analysis, the compliance requirements of transfer pricing in KSA, then the audits, what's happening right now in terms of, it's quite interesting to look at some numbers as well there, and then KSA advanced pricing regime, and then the best practices for managing the transfer pricing risk in KSA. So today's session is the first of the two-part webinar series. The first session is designed to set the foundation covering the KSA framework, and the second session will be built on this foundation with a deeper, practical, and focus on complex and high-risk areas, including the industry-specific issues and advanced transaction scenarios. So the objective today, therefore, is to provide more structured and practical understanding how Saudi transfer pricing regime operates in practice, what businesses should be thinking about from a risk and governance standpoint. I'm pleased to introduce our speakers today. First, Mr. Johan Hundt, Managing Partner at Hundt Partners. Johan has been advising on Saudi and legal and business matters over 28 years and brings in deep insights into regulatory reform, investment frameworks, and practical implementation of the Saudi legal regulations. Joining him, we have our GTPN partners, Mr. Praneeth Narhari, who leads the global transfer pricing and structuring advisory practice with extensive experience in policy design, benchmarking, and an audit difference across multiple jurisdictions. Then we have, last but not the least, Rishabh Agarwal, specialized in international tax and corporate structuring with a strong focus on BEPS, risk management, and cross-border advisory. Together, we have a balanced technical, regulatory, and commercial perspective that we wanted to provide for businesses operating here. Few housekeeping rules before we kick off. The session will run approximately 60 minutes, including the live Q&A towards the end. We also have some questions for you to participate. You're welcome to submit questions anytime using the Q&A or a chat box. The discussion is intended to be more interactive and practical, and we're really looking forward for that. And without any ado, let me hand over to Mr. Johan to provide the keynote address today. Johan, the stage is yours.
Thank you so much, Anand. And very happy to be here with all of you, with Praneeth, Rishabh, and the team, and to have today our first webinar of this series. And the first one of our new corporation. And we're very proud to cooperate with you, GTPN, and all the team. And let's just start right into it. Saudi Arabia, now already legendary Vision 2030, of course, is mostly about economic diversification. Yeah. So, but of course also empowerment of private sector, public sector reform, mega projects, human capital development, social and cultural transformation, which is also already legendary, whoever has visited Saudi Arabia recently, and global integration, Saudi Arabia as a hub in the world, and of course also sustainability. So all this program is basically state-led, but of course market-oriented, and it aims at creating a diverse, competitive, and sustainable economy and society in Saudi Arabia. And it has been all over very well recognized internationally and actually a great success. Of course, it was unveiled in 2016 by the Crown Prince Mohammed Abdulaziz Al Saud, and it's now a few years away from the important deadline of 2030. Anyhow, as you can see here, that's on the regulatory side, which is my field. You have a whole firework of new laws. At the center of it, of course, you have the civil transaction law, which is a civil code for the first time in Saudi Arabia, giving a lot of legal predictability. And then you have, of course, a lot of reforms in the judiciary. You have international standards like International Convention on Sale of Goods. You have the Apostille Convention. You have also a lot of streamlining and bringing the legal system in line with international best practices. And you have, of course, talking about diversification of the economy and diversification of state revenue away from oil, you have the issue of tax. You can see from two arrows, key reforms have been in the field of tax, not only VAT, reform of withholding taxes and other fields, but also in terms of tax transparency away from just a simple principle of arm's length to a real regulation of transfer pricing, which was first unveiled in 2019. And the last reform is, of course, something that you guys will be, of course, presenting on today, which is the advanced agreements, the advanced pricing agreements, which is just was unveiled last year. So that's it. Saudi Arabia is ready for a top-notch tax system, and things are in place. And well, let's listen to the details from you guys. Thanks a lot. And
thank you, Johan, for that. And I just love the word firework of legal reforms. So I'm sure that's the set stage. I mean, given that probably you are here for almost 28 years in the region, and of course in the Saudi, any final thoughts on what's happening here? Just for us before we just kick in with Praneeth on the transfer pricing.
Yes, well, whoever has come to Saudi Arabia, not only to these very important events like the World Defense Show, which is right now on, but also has come to Saudi Arabia and seen the more than 20,000 coffee shops that all the Saudi youth out and wanting to do great things and doing great things actually on their laptops and otherwise, who he will witness himself and see why many people are just talking about the new Saudi Arabia as opposed to the old Saudi Arabia and so on, why this has a lot of drive and a lot of positive things, and it's already a great success. And the basis of it, you have Vision 2030. And let's listen to the tax side of it, how we're getting here the international standards and top-notch professionalism. So up to you guys.
No, absolutely. Just moving on to the transfer pricing in KSA, I will leave the floor to my fellow partner, Mr. Praneeth, to take over.
Thanks, Anand and Johan, for setting the context. Good afternoon, everyone who have joined it. I think this slide kind of gives a good snapshot of evolution of transfer pricing regime in the kingdom. If you see the left leg, the first PCD was introduced for the draft TP bylaws in December 28, followed by the transfer pricing bylaws in 2019. And immediately they had released the detailed transfer pricing guidelines, which is kind of toolkit for taxpayers and practitioners to implement the articles outlined in the transpricing bylaws. So the initial framework was to cover only the corporate tax income payers and also the mixed taxpayers. In 2013, the coverage expanded to even the zakat payers. That's where there was amendment to the TP bylaws in 2023. Also, there was a launch of the APA framework into the regulations. Then 2024, we had a revised guidelines to align with the best practices from OECD. And 2025, we again saw a shift from compliance to a dispute prevention, wherein detailed APA guidelines were introduced. To see on the right leg, all in all, we can say that transpricing in KSA is at a maturity phase because most of the taxpayers have already inducted the transpricing in the system. It's been 8 years of compliance cycle for CT and mixed entities, and third year for the zakat taxpayers. So the compliance is on and rolling. Even the interesting thing is we are seeing a number of transpricing audits every year. The two important aspects I want to highlight from Zatka standpoint, how they are perceiving the transpricing audits in the kingdom. One is they want to ensure that for whatever economic activity or substance you have in KSA, whether the taxpayers are reasonably allocating profits to tax in kingdom. That's one key point. Second thing is, again, it's not only the outcome testing that's happening, but also the detailed review of the policy and framework, which is the underlying documentation in place to support the TP and tax positions of the MNEs. Apart from that, there are 2, 3 additional interesting aspects. One is on the PE profit attribution. As you know, the KSA has two options. One is deemed profit approach and also the OECD authorized approach, wherein TP rules are used for the profit attribution to PE. While there is an option to the taxpayers to select one of the option, obviously they'll go by whatever is yielding the best effective ETR. There is a lot of lens or radar from Zatka standpoint while looking at the profit attribution to PE. And then you have RHQs and SEZ frameworks. While these are seen as landmark frameworks towards the Vision 2030 initiatives, the TP policy framework plays a pivotal role because at the end of the day, the ZATCA wants to ensure that the tax incentives that they're offering yield good substance and value creation happening in the kingdom. And then again, as I mentioned, APA framework is the recent update. They're not looking from a audit prevention, audit resolution, but from a prevention lens, allowing the large taxpayers to go for APAs and obtain tax certainty on their TP positions to ensure that the operations run smoothly in the kingdom. We'll touch upon all these aspects in detail in the ensuing slides. Over to you, Anand.
No, thank you. I think for me, the key takeaway is Saudi Arabia has moved on well beyond the initial compliance phase here. The current enforcement, we see that it reflects a more mature regime here. It's quite interesting, and then looking forward for more insights on this. Now moving on to Rishabh, please go ahead with and set on a KSA transfer pricing framework.
Thank you, Anand. So Praneeth has set the background in terms of how transfer pricing has progressed, and Mr. Johan has set the regulatory background. So I will talk a bit about the nuances that are there, because whenever we talk about transfer pricing, the primary question that comes is whether it is applicable to me. I am a taxpayer or I am a zakat payer, whether it is applicable to me. I think Praneeth has clarified the first part, that it is applicable to everyone in terms that they are taxpayer subject to corporate tax, mixed companies, or taxpayer subject to zakat as well. So there is no doubt about whether I'm paying zakat, am I liable to do transfer pricing? I am paying only corporate tax, am I liable to do transfer pricing? So that confusion, that differentiation has been removed in the recent past amendments. So in terms of coverage, both of them are covered. With respect to transactions is the next question, that I have only domestic transactions or I have domestic and cross-border related party transactions. So again, there is a dot over it that yes, both the transactions are covered in terms whether it is a domestic related party or a cross-border related party transaction. Then what comes next is how do I identify who is the related party? We of course know that there are three pillars of usual identification: ownership, management, and control. Right. The focus in KSA is more on control and common control, in terms that if you have funded, a particular entity, there's a major debt, or if you are selecting the board of directors, or you have control over the governance framework of that particular entity, even that will make you a related party, or be liable to transfer pricing. Considering this, a very wide framework that has been set. So both corporate tax and zakat payers, again covering both domestic and international transactions, and the definition of being a related party too wide. I'm not going into the nuances of it, but I've put in the three pillars: so ownership, management, and control over here. So the next step comes in that the applicability is set, the clarity is there, we know the transactions. Now it comes on how you delineate the transaction, or if at all, you have to create the reporting, or you have to create a transfer pricing framework between these entities, how to go about creating a transfer pricing policy among them. Right. So for that, standard OECD steps or OECD DP guideline steps, you identify the transaction, you do a functional analysis, so functions, assets, and risks, delineate the transaction in terms that which entity is doing what sort of functions, using what sort of assets, that particular nature of transaction, how is the supply chain working? So if it's a manufacturing entity, then how the supply chain will go on. If it's a service entity, how the supply chain will go on and where value is added. So once that is done, of course, documentation becomes part. So you need to have intercompany agreements, MOUs, invoices, and all of it. So that needs to be set at the time of policy setting and post-transaction analysis as well. In terms of following the standard framework of OECD, we have selection of the methods. We'll see, we'll discuss today as well what methods are available. So selection of method, if at all there are any differences between a controlled and uncontrolled transaction, you need to adjust for that as well. So all in all, saying that, everything that has been recommended in a OECD TP framework is present here. Localized, of course, yes. But at the end of the day, pretty much standard in terms of compliances as well. So three-tier compliance here is also there. So disclosure form, local file, master file, and of course CBCR. And we will see again what are the threshold for all of these. And finally, the idea is that you follow it before the transaction, during the transaction, and later as well, and of course document all of it. So the framework is pretty much standard in terms of what is expected out of a taxpayer. I think the three main questions are, of course, on the coverage, sort of transaction that are there, and of course selection of the TP method. So these three things, if they are sorted, and I think then each of the taxpayers that enter into a related party transaction can easily document and be compliant with the Saudi TP framework.
Quite comprehensively covered, Rishabh. I think it'll be interesting that you have talked about the methods, maybe a bit more understanding on what we have in Saudi Arabia. What are the approved transfer pricing methods? Are there any differences that you see? Yeah, just go ahead. Yeah.
Perfect. So see, on method, as I mentioned, it is trying to, Saudi is trying to follow the OECD TP guidelines. So there are five approved, or I would say OECD mentioned methods, starting from comparable uncontrolled price, resale price method, cost plus method, profit split method, transactional net margin method, and of course a residual other method. So I'll talk about other method completely separately because there is a detailed guidance that has been given by ZATCA on the use of other method. But however, these five methods or OECD approved five methods that are there, ideally speaking, can be used in certain set of transactions wherein the first one, the comparable uncontrolled price method, being the most direct, I would say, direct as it because it is directly comparing the absolute price of a controlled transaction to an uncontrolled transaction. Thus, can be used in any sort of a situation. So if you have a sale of goods, purchase of goods, sale of raw material, purchase of raw material, provision of service, availment of service, if you have royalty payments, if you have interest payments, So all of this, or if you even for that matter, you have transfer of assets or intangibles, so can be used directly in any of the situations, because yeah, it is absolute price comparison. But then it is more susceptible to the comparability differences. So you cannot compare model A with model B if I'm talking about goods. It has to be A and A that you compare in a cup scenario. Then of course we have resale price and cost plus methods, both gross level methods being utilized in a buy sell transaction. So resale price in a situation where we are buying and selling directly without much value addition. So yes, this is a typical type of business model where you can utilize resale price method, and cost plus method where is there's some sort of contract manufacturing or limited value addition is being done. So that's where you apply the CPM. With respect to transactional net margin method, I would say it has, I always mention, it has been the savior of transfer pricing consultants. And it's a net profit based methods, least susceptible to comparability differences. And we'll see how the ZATCA guidance also frames a lot of things around the use of transactional net margin method. But at the end of the day, in case where you do not have a lot of information available, but you have entity level margins. So that's what we try and do by using the transactional net margin method, comparing the net profitability of our own entity versus of the industry standard or the comparables that we have had. Uh, for profit split method, I would say that it's a very complex method in terms, you use it with highly integrated operations or, use of intangibles, and where you cannot separate the functions and risks of the entities in the supply chain. So there has been again detailed guidance by the ZATCA and in the by with respect to usage of profit split method, and they mentioned that if at all you wish to use profit split method, we would recommend that you do that in a APA. So I will talk about APAs later also, but just keeping that hook here that if you are using profit split method, it is recommended that you apply for an advanced pricing arrangement with the tax authorities so that the assumptions that we need to take while applying the profit split method are agreed on day zero before you enter into the transaction. Um, about comparability analysis, I mentioned that there are certain, these methods are susceptible to comparability differences with respect to what sort of method we are using and what are our comparables, right? Uh, we all know that data in KSA, or for that matter in the Middle East, is very limited or the financial information for companies is very limited due to nature of operations that has happened in the regulatory environment. Of course, it is improving. Day by day, it is improving. But so in that terms, ZATCA has been very clear that, of course, you need to take local comparables. Once you do that, you go expand to regional, and then you expand to global comparables. Once that is done, that's you need to stop wherever you find maximum comparability. And if at all there are any comparability differences between jurisdictions, you need to go and adjust for that. One interesting point that is available over here is what is arm's length, or we calculate the interquartile range over here. So 25th percentile and the 75th percentile, as recommended by the OECD as a statistical measure, to calculate that it is at arm's length, yes or no. So if you fall within the interquartile range, perfectly fine, your transaction is at arm's length. However, if you fall outside the interquartile range, the idea of ZATCA doing an adjustment will not be to a lower quartile or to a medial quartile. It will be to the median. So it is much more of an incentive that you fall within the interquartile range at the first place, because then you have the flexibility to move near the lower or upper, whatever suits you the best. But at the end of the day, if the ZATCA or the tax authority is making an adjustment in a transfer pricing audit, it will be to the median. So I think I'll rest it over here about the methods and comparability that we do.
No, thanks, Rishabh, for that. That's a quite interesting about the interquartile range again, just to see that the median as a point. So at least from a planning perspective itself, when you start any new transaction, new business, so have the policy in place clearly so that you understand and then support and realistically look at quarterly, half-yearly basis just to see we are able to, from a policy perspective, are able to rightly implement it. Now, moving on to the next slide, now that we have a clear understanding in terms of the methods, comparability, and then get an overall framework, now we like to more understand on the whole compliance requirements that we have in Saudi. And I would request my partner Praneeth to take it up.
Thanks, Anand. So this kind of gives a good snapshot of the compliance obligations in KSA for the taxpayers. It's important to understand that non-compliance in itself at the first stage will be viewed negatively by the ZATCA. So we have to be well aware of the TPE documentation requirements at the year end, depending on the thresholds, due dates, and the penalties. If you see the overall framework, it's a three-tier documentation along with the local filing flowing from the Action 13 of the WEB's plans. First one, TP disclosure form. Here we'll have to submit the transaction specific details. In addition to that, the DFCT of KSA is quite detailed. It goes into asking for any business restructurings during the year, details of legal and beneficial ownership, because it sometimes becomes tricky for multinationals to give details to that depth. We also have to disclose non-monetary transactions, basically free of cost services and transfers. So all this go into TP disclosure form, which is filed along with the CT return. The due date for that is 120 days from the end of relevant fiscal year. One important catch here is there is no monetary threshold for applicability of this form. We have to disclose all control transactions, be it monetary or non-monetary. I'm highlighting non-monetary because we have to also disclose free of cost control transactions. This becomes typical where Saudi is the beneficiary, being wherein the inflows have to come to Saudi. So any free of cost will only reduce the tax base of KSA, right? So this will be under radar by ZATCA. Second is the affidavit. This is the CA certificate by the local license auditor in the kingdom, wherein the auditor certifies that the control transactions overall conform to the group TP policy. This goes as an attachment to the DFCT along with the tax return. Again, the due date is same as the disclosure form. Apart from these local filings, you have the three-tier documentation requirements. One is your local file, which is the entity-specific documentation. We'll have to give the detailed functional analysis, comparability analysis, along with the transaction flows and details, the detailed documentation. This is not filed. It has to be maintained contemporaneously along with the tax return, because this kind of becomes a base for your disclosure form and the affidavit that the local license auditor will certify. This will be filed upon request within 30 days from ZATCA in case of any TP audit. And then the thresholds for it, we have to read it along with the master file, because both local file and master file have same threshold requirements. Before getting into the threshold criteria, let me give a brief of what master file entails. Unlike a local file, which is entity specific, master file is a group-wide documentation, wherein you have to give a big picture of the group business background, the organization and legal structure, along with the high-level descriptions of the financial transactions, intangibles, and APA or tax rulings. The threshold criteria is, again, two batches. One is for CIT and mixed entities, where the aggregate control transaction value is more than Saudi Riyal 6 million. You'll have to maintain local file and master file. For Zakat entities, since it's a recent induction, they've made it in two phases. In phase one, between 24 to 27, it's applicable for Zakat paying entities where the aggregate value is more than 100 million. And later on, the coverage is expanded by reducing the threshold through 48 million Saudi Riyal. As I said, it's not a filing obligation, but it has to be maintained contemporaneously and file upon request within 30 days by ZATCA. In addition to that, you have the country by country reporting for the large taxpayers. I would call it as a report card at a MNE level, wherein you have to give financial and tax information of all the entities jurisdiction wise. This is applicable as per the BEPS threshold, which is Saudi Riyal 3.2 billion. Both the CBCR filing as well as notification filing is there. Unlike the disclosure form, which is filed on the ERAD portal, the CBCR is filed on AUOA portal of ZATCA. It has to be filed within 12 months from the end of relevant fiscal year, whereas notification has same due date as the CT return. So this is kind of overall snapshot of the compliance obligations for both CT and Zakat taxpayers in the kingdom. Over to you, Anand.
No, thanks, Praneeth. I think one important point, and then we always get this question, is whether if you don't maintain, do we need to maintain a minimum documentation if you don't touch these thresholds? I mean, we don't cross these thresholds, we are below that. Still, are we expected to do something about it?
That's a good question. Yeah, the straight answer is yes, we should maintain transparency documentation even where the quantitative thresholds outlined are not met, because ZATCA has power to seek such documentation even from the taxpayers who are not following or satisfying these thresholds. While natural persons and small entities might be an exception, all the entities who are mainly transacting with, say, low tax jurisdictions or exempt entities or special economic zones will be under radar. So it's recommended for everyone who have controlled transactions to maintain minimum transparency documentation, mainly the comparability analysis, as we call it. Yeah.
Thanks, Praneeth, for the clarification. I think that kind of helps because uh, the minimum policy document and minimum understanding of related party transactions, I think that is very much required, making sure that your financial statements and your disclosure form, because considering there is no threshold for disclosure form, these all are aligned, and then you have a proper backup documentation to that. I think moving on, next we have a very important topic that we like to take it up again by Praneeth, transfer pricing audits in KSA. Over to you, Praneeth.
This is an interesting slide because we have captured practical insights here. So in the earlier slide, while we have to tick all the boxes by ensuring compliance obligations, but more importantly, we have to ensure that these are audit defensible to avoid any sort of TP risks or adjustments made by ZATCA. Let me first highlight the typical audit triggers based on our TP audit experience. If you see the left side, first one, business restructuring. Uh, Everyone might be curious because business restructuring is a remote item to pick in a TP audit scenario, right? But the interesting thing is this field is a mandatory field that has to be filled up in the TP disclosure form. So there is a first-hand information which is available to the tax authorities to look into and verify the backup documentation. And then, of course, high-value control transactions, especially if they are outbound payments, because they are viewed as repair strategy, right? Be it royalty, FTS, management fee, all these have to be properly documented. I would say at a two-layered approach. One is the ALP test or the TP policy framework. Second is the need benefit documentation to ensure that there is no duplication. There is actual benefit which is derived from the beneficiary entity which is paying these FTS royalties or interest. And then loss-making entities, of course, are under the radar wherever you have this again tested party, because the TP guidelines restrict use of loss-making comparables in the comparable data set. So it is kind of difficult to defend if you are a loss-making entity, especially if it is persistent losses or has fluctuating margin. So we should have enough documentation on the life cycle of business, the business strategies that are resulting in negative bottom line. Then we have intangible related transactions, not only on the license or royalty fee, but also the transfer of IP pursuant to business restructurings, because ZATCA allows you to use valuation techniques to determine the fair value of these transfers. There is additional lens on such IP transfers. Apart from this, we have TP disclosure form inconsistencies. So ZATCA goes by two-way audit approach. One is based on the threshold, second is based on the risk-based assessment. So wherever there are inconsistency in your filing, be it tax filings, statutory filings, and the disclosure form, will get picked up for scrutiny. So it is important to ensure that we frame a 360-degree view and ensure that there is alignment in the values and the TP positions we are taking across the documents that we are filing with ZATCA. The last one, the tricky aspect is the non-monetary or free of cost items, because even in the Zakat regulations, they've highlighted to mention the interest-free loans or free of cost items in a tax return. Okay. So again, they will see from KSA standpoint, whichever results in tax-based erosion, they'll be under additional lens from ZATCA. So these are the typical audit triggers. All in all, what we highlight is to maintain robust TP policy framework and ensure that your compliances are met with a 360-degree overview to ensure that these are audit defensible. Now, just to give a typical steps that are involved in the KSA TP audit process, once you file the compliance obligations, they'll be reviewed by ZATCA and picked for TP scrutiny. Once the TP audit selection takes place, you'll be issued information requests, and in addition to your submissions, they'll also do a functional reviews, be it virtual or physical. The minutes of the meeting plays a crucial role. So whatever is being discussed at the site or virtually has to be properly documented, because this will have bearings on the overall assessment that happens in the draft order. So once the draft assessment is done, the taxpayers will have right to rebut and provide the detailed submissions, and then that's where the final assessment is concluded. If the taxpayers are aggrieved by the final assessment, they have two routes. One is the settlement, wherein they can go and settle the case. The other is the appellate forum. Again, two layers. One is the tax committee, and then further appeal to the tribunal. So it's a long drawn process. That's where we have dispute prevention tool in form of APA, which is introduced. I'll let Rishabh take that up. Over to you, Anand. Yeah.
Thanks, Praneeth. I think it's my takeaway again is having a story across the board from the beginning, from your financial statements and whatever the form that you're filing, your local file, master file. So if you leave something in your form and then you don't cover that in your documentation, and then I can clearly see these are the triggers. So that's really, really important to have. Now that we talked about audits, again, it'll be ideal to see if you have any mechanism to resolve it before. So that's one of the things that we have it is APA. I would leave, Rishabh to take over on that KSA APA regime.
Thanks. Thank you, Anand. Thank you, Praneeth, also to share the audit triggers and the ground reality of how and what ZATCA does in case of an audit. So before I go to the nuances of APA that you see on the screen, I'll just take a very short brief on what is an APA. So APA is an advanced pricing arrangement, as the name suggests. Advanced as in it's pre the transaction. Pricing as in it's for transfer pricing. So what should be the mechanism, how you should benchmark, or what approach should you use to ensure that your transaction is arm's length. And arrangement, so arrangement on agreement is between the taxpayer and the tax authority. So in this case, ZATCA. So advanced pricing arrangement, if we bridge all the three words, so it is for future transactions, solving transfer pricing issues or giving guidance on the transfer pricing issues with respect to an arrangement between the tax authorities and the taxpayer. So that is what an APA is. It's a dispute prevention tool because it gives you clarity, it gives you tax certainty, and it is globally recognized as one of the best methodologies to obtain tax certainty in terms of a transfer pricing case, right? Two types of APAs that are available. So unilateral. So when we say unilateral, so it is an agreement between taxpayer and ZATCA, and then bilateral. So it is an APA between the two tax authorities of a particular involved in a particular transaction. So let's say the related parties are in KSA and India. So the bilateral APA would be between tax authorities of Saudi and India, right? However, as of now, only unilateral APA. So an APA between the taxpayer and ZATCA is available in Saudi Arabia. It is available for both domestic and cross-border transactions. However, they've set a materiality threshold of 100 million Saudi riyals. So if the transaction value exceeds 100 million Saudi riyals, then you can apply for an APA, but it is only and only an indicative threshold. If your transaction is complex enough or it's very high risk transaction and it is less than 100 million Saudi riyal, you can still apply for an APA. This threshold will be waived off by ZATCA. Of course, they have the decision making in their hand and they have the discretion with respect to this threshold, right? The interesting part over here is that there is no filing fee for APA in Saudi. We usually see that there are statutory charges that the tax authority will have in order to, do all the work and also to spend time on it. The tax authorities usually charge a particular statutory fee, which is absent in Saudi Arabia, and it's a very welcome move. So it really shows that tax authorities are interested in order to give tax certainties to the taxpayer and enter into APAs and conclude APAs. However, there is a downside to it. It's a double-edged sword as well. Usually, the tax authorities keep a fee on APA applications for two things, because of two reasons. One, to avoid frivolous applications, and two, to make good for the resources that they are going to spend while researching, while negotiating the APA. Because again, the taxpayer is representing to the tax authorities, and they will have to put in resources and time and effort in order to conclude an APA with the taxpayer. So, honestly speaking, not having a filing fee is a plus point. However, from a taxpayer side, also or from a consultant's angle, it takes a lot of time and effort to prepare the APA applications and to go through the complete process, being in 4 steps, from going from a pre-filing process to a formal APA application to the negotiation process, and then finally getting that APA arrangement, APA thing signed. So it's a 4-step process where pre-filing is like a pre-scrutiny or a sound check per se, that this is our transaction, we are giving certain facts, whether you'll accept our formal application or not. Once that pre-filing is accepted, you actually make a formal APA application to ZATCA, and it has to be 1 year in advance of the year that you're trying to cover. So since we are already in 2026, February 2026, we cannot cover the calendar year 2027. However, the APA now, if we apply now, is available for the calendar year 2028. Considering this is the perfect inflection point. As of now, we are on 11th February 2026. This is a perfect inflection point for entities to realize that we have approximately 10 months or 10 and a half months to cover certain transactions for 2028. So see whether we can apply for an APA. Do we need tax certainty? If at all, yes, it's perfect timeline to prepare for your case, do a pre-filing, make a formal APA application, and get into the process. So that is the importance of APA as of now, sitting in February 2026, that you have about 10 and a half months to file for an APA that will cover your years going from 2028, the calendar years or tax years going from 2028, right? So this complete process is done. However, the taxpayer can, of course, withdraw from the APA if they feel that it's getting too cumbersome. But honestly speaking, the idea of ZATCA over here is to conclude as many APAs as possible. It gives a good image of the tax authority. It also shows and how much confidence a tax authority has in the tax payers or the investors in that country. And again, looking at Vision 2030, they will approve and sign a lot of APAs wherever the facts are, they agree on the facts. There's not a lot of assumptions. And hence, I also mentioned during the TP methods that profit split. So ZATCA itself recommends, if you want to use a profit split, no problem. You come to me, you talk to me, we'll set the assumptions right, and I will give you an APA for using a profit split method also. Right. So that is there. Certain, nuances or, smaller things on APA that, okay, it's only prospective. So of course, for the New transactions, it is there. There is no rollback that is available. Once an APA is signed, it is signed for 3 years. So complete tax certainty for the next 3 years, provided your facts are not changing, your FAR or the functional analysis is not changing, right? ZATCA asks you to file an annual compliance report just as a checkbox in terms that you continue to follow the conditions mentioned in the APA, and of course, your facts have not changed, right? Because if your facts change or the transaction change, that APA is invalidated. So that has to be done along with the corporate tax return that you file. So you have a timeline of 120 days from the end of financial year in terms of filing that annual compliance report. So all in all, that I'll tell you, to summarize the APA regime, it was brought in last year, but it was one of the most welcome move for the taxpayer who are involved in highly complex transactions or high stake transactions also. Because if you're talking about a 500 million real transaction, and once even if 1% of addition is made, so that becomes 5 million Saudi riyal, right? So for high stake transaction, it is recommended that you go for an APA. You get a tax certainty from the tax authorities that yes, this is the methodology I need to follow. At least you will be saved for the next 3 years. And then you can continue to do that year on year. There is a renewal that is available for the next again for the 3 years. So overall 6 years would be covered probably under one application once you do that. And this is the perfect point to do that for 2028. Looking at Vision 2030, you will be covered until the Vision 2030 is achieved, and you can take the benefit of the push that Saudi, as a government, as a country or jurisdiction, is doing for the business and foreign investment.
No, thank you, Rishabh, for your insights. Again, as I say, prevention is better than cure. Probably I would just also request and see if you have some insights in terms of any numbers, in terms of APA, what's happening on ground, Praneeth.
Yeah, let me give you quick stats. Again, these are not from public sources, but through our informal sources. On the TP audit cases, what we understand is there are 45 plus live cases on the TP audit. On MAP, which is there in public, as per the latest inventory stat, there are 24 TP MAP cases. 22 are pending, 2 are concluded. One was with Korea, the other was with UK. That's on MAP. And then APA, of course, what Rishabh touched upon. There are around 10 to 15 live APAs. We expect most of them to reach conclusion phase in next couple of months. Yeah, these are in some interesting stats. Yeah.
No, I think it's lots has been transforming, I would say.
Mm.
What we see in 2019 and then the last 6, 7 years has been in terms of how Jatka has stepped up. So quickly, we have few polls that we wanted to make it more interactive for you. I would request audience. The first question is, have you had a transfer pricing audit queries from Jatka? So we see already 13 responses. We would appreciate everyone participate so that we'll have a better idea on what's going on.
We'll wait for another 15 seconds to close this one.
Yeah, yeah.
Couldn't see the poll
I
details.
think close to 20% says that they have actually received queries. Okay,
So I'll go for the next poll, Anand.
sure.
Yeah.
So the next one is, do you have intercompany balances within the group outstanding over multiple years? Meanwhile, while on the poll, any feedback, it's quite interesting because this is something more looked at from a UAE perspective. Rishabh or Praneeth, any thoughts on that?
Go ahead, Praneeth, because I think there's a related question on interest-free loans as well. So I think you can cover this part. You're on mute.
Let me take that up together. One of the interesting aspect that is brought into zakat regulations is recharacterization, even the TP regulations. So wherever you have long overdue trade balances, they are generally considered as purported or deemed loans, wherein you have to charge certain interest for overdue credit period. So it's not good to, as a good corporate governance policy, not good to have long outstanding trade balances. Better to have it settled or netted off within intercompany credit period. That's on the long overdue balances. Second question, to answer to the specific query that is brought up on the interest-free loans. Again, s- any non-interest bearing loans will be treated as equity. There is risk of recharacterization. Okay, unless it is done in the shareholder interest. It's better to have interest imputed, because in an open market scenario, no entity would get funds for free of cost, right? While in the specific question, I understand KSA would be the paying entity if there is any interest imputation. Again, we'll have to see it from a non-resident standpoint in the kingdom, because it becomes a state-sourced income, right? So to have a good two-sided TP analysis, it's better to have proper interest rate policy through robust benchmarking, ideally through specific financial transaction databases like Loan Connector or Bloomberg, which considers the key terms of loans, which might be currency, quantum, purpose, more importantly, the credit rating of the borrower, and have interest imputed on such loans to avoid any scrutiny on both ALP test as well as recharacterization from ZATCA if picked for audit. Yeah.
Thank you for the clarification, Praneeth. Yeah, I think we are good to go on this as well.
Anand, I'll
Yeah,
launch one more poll,
sure.
and until then, I think we can also take some questions that are there
Yeah.
in the chat box. So there is one about APA. So to answer the question is that whether these APAs are approved by ZATCA or not. Sir, honestly speaking, these are in process. APA regime was launched recently, so they are in process. But yes, filing have been done. This is the maximum that I can share as of now. All of them are unilateral APAs because that is only open as of now in the KSA APA regime. So I hope that answers your question. So these are only unilateral APAs. Yeah. And
We can take one more question, Rishabh. Any other questions, or you can pick it up
so
from
there
there?
is one about benchmarking filters. So from an anonymous person. So ideally speaking, yes, there are certain filters that have been looked from both qualitative and quantitative aspects by ZATCA. However, we have not discussed benchmarking as today's subject. We're not going into details of that. But to your question, briefly answering yes, there's a standard that is looked by ZATCA while seeing the benchmarking analysis.
I
Yeah.
think we are almost at the fag end. We have just 5 minutes left, so maybe we'll just go to the last slide in terms of the best practices now. I'm closing the results. Thank you all for participation. So I'll quickly take a couple of minutes in terms of ultimately today we have discussed about legal framework, we discussed about audits, and we discussed about the methods, the overall what we have in KSA. And it's really important for all the groups operating here to perform a holistic TP health check. It's a kind of a diagnostic review to understand what's happening, because if you look at it in the last 4 years, we more or less, I think every 2 years or 1 year, we have seen updates on the JATCA from a transfer pricing perspective. So are we aligned with the new updates? Are there something that we needs to be done? Do we have the right information? That's one important thing. Again, the 360-degree review of documentation between coherence and making sure you have the substance, and then having the same story and alignment between TP disclosure form, master file, local file, and all the intercompany agreements and invoices. Then again, the benchmarking, again, Rishabh mentioned clearly on what is expected out of it in terms of selection of the comparables, or also excluding the loss-making companies. And again, also understanding the clear screening criteria. And because we also have that point where if tomorrow the benchmarking it's not in the interquartile range, then it gets adjusted to the median. So from the beginning itself, having that planning and having that framework is really, really important. And then applying a substance-based analysis for create transactions. Again, the most litigated is in intra-group is management fees, headquarter fees. So whether you actually have people there who are providing that kind of a service, is it the benefit test done in terms of the activity? What is the supporting documentation that you have? Do you have board meetings, board resolutions? Do you have any strategy document that these decisions are done here? And then is it aligned? So I think these are very, very important that your substance should actually match with the value creation that's happening. And then the value creation has to be clearly identified and aligned and quantified in the reports as well. Again, consistency, which I have discussed, and we also have a APA, which Rishabh discussed about how it can be a risk mitigation tool. Then ultimately, in the GCC region, not only in the KSA, now we know that transfer pricing have already moved to the board. So it's no longer just an accounting or a tax discussion with financial controllers. So it's with the owners, it's with the C-level executives. It's one of the most of the hot topic, and that kind of gives you an idea how important it integrates with the broader governance and compliances. And then finally, looking at where if there are transactions with low jurisdictions, and then again, we're looking at a considering of a map here. Maybe I'll just give like a minute or two to Praneeth to comment on that. But overall, I would say these are the best practices for us to make sure that, to avoid audits, and then to have also from a business perspective to maintain the real tax framework. Praneeth, maybe a final comment. Also, Rishabh, any overarching comment as well before we close the webinar?
So the way I would put it is instead of looking at dispute resolution tools like MAP, we should look at dispute avoidance through proper group level TP policy framework and ensuring that all the compliance obligations are met. And then wherever you see there is a reason to go for APA as a dispute prevention tool, the taxpayers have to make use of the framework which is available in KSA. That's it from my end. And I know we have follow-up webinar with more deep dive analysis. We can take that up in the next webinar. Yeah.
Rishabh, any thoughts before I pass it on to the final remark from Mr. Johan?
No, Anand, I think I'm good. Only thing is, I've posted the link of the next webinar also in the chat box, and I'll let it to you now.
Mr. Johan, any final comment or remark?
Yes, thank you, Anand. That's of course all great guidance and advice for the business community, and thank you so much. And we see that with the right partnering up with the client, you navigate the Saudi tax system very efficiently, and that's what we're aiming at, especially with all your expertise. And thank you so much, and looking forward to our deep dive webinar next time.
Thank you, Johan, for this, and then Rishabh, Praneeth, thank you all for your time, and all the participants, thank you for joining. We look forward to seeing you on 25th for the deep dive. Have a wonderful day, guys. Thank you. Bye-bye.
Bye, everyone.
Thank you, guys.